What's going on YouTube? This is Dave's Daily Trades, where we cover daily AMC technical analysis, price predictions, and of course, bringing the latest, greatest news. In today's video, we're going to be taking a look at the raw beta for AMC, which is absolutely fantastic. We're going to be going over some Ortex data that is just so similar to previous levels that we were at, which led to massive spikes. We're going to be taking a quick look at IV, implied volatility for those who don't know. We're going to be taking a look at Bank of America upping their positions on puts, calls, and shares as well. We're going to be going over some very big issues happening overseas in China right now and how this is reflecting in the stock price and how this could make its way over to the US markets. But first, guys, we are going to start off with a quick AMC technical analysis. So be sure to hit that like button and subscribe for more content. All right, so on to the video. So really, guys, right now we do have the 1 minute chart open for AMC, and there's really not much to talk about. Really, all day today was a straight sell-off and closed just about 30 cents, 33 cents to be exact, higher than the low of today. Overall, we were down just about 8.5%, up a little bit after hours, but take after hours with a grain of salt. The only things worth mentioning on this 1 minute chart is right around 1:30, 2 o'clock-ish, we did have this bounce off of that $48 range. But once we came off of it, this area of volatility, which is extremely rough, choppy trading here, came back down and, like I said, hit a low of 46.97, but closed at 47.30 for the day. Now, there are a few things I do want to take a look at, and this is going to be on the 1 day chart. Now, I know everyone was a little disappointed with this red day, but guys, we need red days in the market. AMC isn't just going to have all green days. It's not always going to be beautiful and dandy over there. But with that said, we do have this trend line that I have ironed out here in white. It looks like we've been following this very perfectly for just about the past 2 weeks now. So we were diverting quite a bit from this line, so this pullback was natural. And of course, I mean, we've had 1, 2, 3, 4, 5, almost 6 days of consecutive higher lows. So I'll take this one red day all day. That's totally fine. Now, the key levels that I'm looking at for the rest of the week is, of course, going to be holding this trend line right here. So that would bring us tomorrow. I would say the lowest we would be able to hit here is just about that 46.50 level. So very close to tapping this trend line here and starting to make higher highs. Now, of course, we are going to talk about worst case scenario because we always need to consider the worst case. The worst case scenario is if we do fall below this line, we're either going to be stopped over here right about at $40, but the absolute lowest I see us going is right about to that $38 mark, where we do have very healthy support. So that's really what I'm watching on these key levels. But one thing that is super, super interesting is currently right now we're sitting at, and let me just move this over a little bit, 20% short interest. So the last time we were at a high of 20% short interest was back on May 26th. And as you guys know, right after this came out, we started to move and actually hit that high of $72.62. Now, if we take a look at this, we are currently on the 14th of September here, sitting exactly at 20% short interest. But look at the difference here. We're currently at 47.30. Back here when he last reported short interest, we were trading right around 19, call it $20 on the dot. So our stock price has more than doubled, well more than doubled since that price, and the short interest remains the same. And that, of course, is just the reported short interest. Of course, we do believe that this is much higher than it's being reported, and that's what happens when we don't have the greatest access to data. Close enough, and that's totally fine. That's all we need. But what this is looking like is very similar to mid to late May, where we came up, tested this RSI level of just about 70, came back down, and then started that massive move up. So, of course, the dip before the rip. And that was this little mark right here that I have highlighted, where we came up, came back down for a couple days, and then shot up. And that was the RSI taking a rest after hitting 70, and then, of course, booming. Now, what do we have right here? We have a very similar pattern. We have this nice run up in the stock price, come up to a major resistance level, come back down, RSI cools off, and we implode. Now, look what we got here. And this almost lines up perfectly. We have the RSI sitting at, right now, 57.41. Looks like the RSI hit a low of just about 50, call it 56 to be even here. 56 on the RSI before hitting that nice run-up. So really, I think this dip right here was really just to drive down that IV, the implied volatility on the stock, make the option contracts look good, take your option contracts to hedge against those puts, and of course, to even things out and to minimize your loss on that way up. And that's personally what I'm going with the story for right now and what happened today. Really trying to shake out some paper hands before this movement upwards. And guys, I hope you weren't fooled by that, because that was absolutely nothing compared to some days that we've seen. Anyways, I really think that this is the dip before that massive rip. Technicals are looking really good, and this is looking just so similar to late May. And boy, was June 2nd a freaking day. And of course, looking down here at OBV, nothing has really changed on this. Of course, apes are not selling, guys. All the sell pressure was shorting borrow shares like they've been doing for some time now. Anyways, let's jump into the meat of today's video. So this was something really interesting showing up on the Bloomberg terminal. And of course, like I do with every video, guys, I'm going to have these linked in the description below. So be sure to check this out because this is some really great stuff. So of course, in my previous videos, and of course, I don't have access to a Bloomberg terminal. I don't have 40 grand laying around. So it's great to lean on the community for some of this information here. But I remember previously, we're estimating that the beta for AMC was just about at like -3, -4, somewhere around that range. But the raw beta coming out on the Bloomberg terminal is saying -14.8, which is just absolutely insane. Call it even -15% at that point. That's wild. So that essentially is correlating with the market. Having a negative beta is saying this stock is going to go down as the overall market goes up. Now, of course, when we're in a very bullish market, it's not the greatest thing. But of course, as we've talked about on this channel for quite some time, the market is in very risky positions. So if we do have a market correction, this negative raw beta that we're seeing right here of -15 is so unbelievably huge. It is just going to be absolutely insane. So that is something I really had to share with you guys, because I think that is going to play a very important piece when the market does decide to correct. Now, just to show you guys where I'm getting this number, of course, this is or text right here, going over the short interest percentage of the free float. Now, very, very interesting here. Current SI is at 20%. And if we look back on the 28th of May, it was exactly at 20%, 102 shares short, and right now 102. So this is just so similar. And of course, as I said previously, 28th of May really was the start of that massive run-up, and that, of course, brought us to June 2nd when we hit that high of 72 and some odd change over there, which is just so massive. So, of course, the large SI percentage share is going to bring in those day traders, those swing traders, those momentum traders, and especially the thing we're looking for is for volume to pick up. Once volume picks up, that is really when we can see that bull run start to form there. So that is really great to see. We'll definitely be keeping an eye on this data, seeing if this goes any further. But personally, I still think this has some room to run. I don't think 20 is going to be the start or end of it all. I think this is going to go up higher, probably to 23 to 25%. Anyways, one really interesting thing, Ranch Capital over here, great person to follow on Twitter. Definitely give him a follow if you're not already. He's talking about IV percentile down to 8%, which is very low, guys. That is extremely low. Of course, IV itself was down to 141. If we're talking regular stocks here, that is still pretty high compared to most of your stocks out there in the market like Apple, Amazon, Facebook, you name it. But when we're talking about meme stocks and especially AMC, seeing AMC sitting at 141%, That is extremely low. Now, option traders are looking for healthy IV stocks. When the IV in like AMC has been over 250%, it's not really a smart investment to take those plays because, of course, you have a lot of things to do with the price. And IV, of course, is not the only decider of the price, but a very large decider of that. So when IV is very low, option contracts and the price of them are extremely low, and that means they're extremely favorable to jump in. Now, of course, what happened back, if we jump in the chart, over here, this was a prime example of a gamma squeeze. Lots of people were taking those. I'm trying to remember the exact price. I think it was those $40 call options, and that is essentially what led us to the 72.62 run up there. So, of course, option contracts being cheap and very favorable is going to help out our cause quite a bit. Now, I do want to direct your attention over here to the 13F on Fintel. Now, of course, I do not pay for this information, so we can't get the exact put and call ratio going on with Bank of America. But nonetheless, we do have access to the shares. And look at this. 1,168,665 shares were purchased by Bank of America. Now, the file date of this was 9/13/21, but of course, this data does lag a little bit. But it's really good to see big institutions jumping into AMC, which just gives us more confirmation that good things are on the way. And the other interesting thing is these puts and calls are locked here. It's only because I don't pay for this information or this data on this site, but just to see them taking more puts, more calls, getting more leverage into those positions, that is something great and really just shows me that something good is on the way. Now, during yesterday's video, I did talk about Evergrande, the Chinese real estate investment company that is on the verge of bankrupt. Of course, I'll just take a quick look at their chart so you can see this. I mean, this is over the past 6 months. They're down 79.11%. Now, of course, this does not look due to no market demand. Now, guys, I know this is happening in China. It's not directly impacting us right now in the United States, but this is something that if, of course, they do go bankrupt of this, is really going to roll over throughout Europe, throughout Central America, and throughout the United States. This is really what I think the first layer of this collapse and this market correction that we're going to see. This is the first effects that we're actually seeing of this. Now, really interesting because how is it related? It's because there are U.S. banks, for instance, I'm going to throw Citibank out there, who are invested into a lot of these funds, and Evergrande especially. Now, Evergrande was the one example and the one, I guess, company really hitting the headlines. But the real estate market in China is very, very risky right now. And this is only one of many companies that are really suffering the economic effects of this. And it's just really terrible to see. I mean, 15 skyscrapers, I don't even know how much money this would cost, but that's a lot of money out of the bank right there. And of course, you have workers not being paid. You had people who were investing in their bonds who are losing shit tons of money. I mean, the list goes on, and it just shows the first start to a massive global-wide market correction. That is exactly what I'm believing. And jumping back to a previous thing we covered, having this negative beta over here of such a high range, -14, almost -15, is really going to help us out when this affects the U.S. market. And that is why, ladies and gentlemen, we are extremely bullish on AMC and, of course, GME as well. So really just to recap today, not the greatest day ever. It's okay, but we need those red days in the market. And especially, guys, buying dips on days like this is absolutely great. Now, I do expect a slight pullback into tomorrow, possibly in the morning, coming down to a low of just about 46 before we move past this range and move past that 53 resistance range. So that's my estimates for tomorrow. Let's see what happens. But I really think that the end of this week or early next week, we are going to start to see these massive moves like we saw here at the end of May. So guys, that's all I have for today's video. Be sure to like that button and subscribe. Peace out.